All right, I think we're going to start. Um, well, over the last couple of weeks, we've all been bombarded with all kinds of events, news, and a lot of new information. So the purpose of this today is that I want to walk through some of this information and try to figure out together what will be our best course of action to deal with this coronavirus crisis that we're all going through. So with that said, um, here's the outline for today's presentation. We're first gonna take a brief overview of the latest on the Families First Corona Response Act, see what we need to do there. Then after that, we'll again take a quick overview over the CARES Act that was passed by the House and signed by the President yesterday. Then we'll do a comparison because I've been getting a lot of questions about should I apply for the economic injury disaster loan or the Paycheck Protection Program. We'll go through both of them, and I definitely think we're going to have a clear winner here. Then we'll go through also what documents might be needed with the new Paycheck Protection Program, which is a 7A loan. And then we'll try to pull all this information together and figure out what should be our course of action going forward. And if we have time, because I want to be respectful of your time, we'll try not to exceed 1 hour. We'll have some time for Q&A. All right. So here's basically the latest update on the Families First Coronavirus Response Act. I hope many of you were able to watch our friend Ali Oramchian and the good people at HR for Health, because I think the information he gave out yesterday should probably have put a lot of people at ease. So, finally, the Department of Labor has been able to issue guidance on this. And basically, what we're finding is, one second. I just want to make sure that I have my comments turned on. Before we go any further, can you guys please turn off or mute your microphones? I'm getting some people are telling me that there's a lot of background in the background. So a lot of noise in the background. So if you could please mute all your microphones. Thank you for letting me know. All right, so going back to the presentation, based on our friend Ali Oramchian and the good people at HR for Health told us yesterday, basically, if your office is closed, and based on the Department of Labor's Q&A answers that were released, I think, Thursday night, and I have a link here for that at the DOL's website. If your office is closed, then you don't need to comply with this April 1st deadline to make payments for paid sick leave and paid family leaves. Now, once you open, your employees may be able to, if they fulfill certain requirements, and the DOL will issue those regulations, may make a claim And then after you open, you may have to pay those. But for the time being, while you're closed and your employees are not working, you don't have to deal with this. And you could go to the DOL's website. Also, I believe Ali and HR for Health are going to be having a webinar on Monday at 9 a.m. Pacific time. I encourage all of you to attend that webinar and maybe get more of your questions answered there. But as of now, if your office is closed, I think you need not to worry too much about this. All right, so I know everyone has been anxiously awaiting to learn more about the CARES Act that was passed. And I know based on the questions I've been getting that a lot of you have probably been reading up on it as well. So hopefully we'll have some useful information here for you. And we'll try to sort through this sort out this together. So one of the main provisions for the CARES Act is that the government will be guaranteeing loans to businesses that were affected by the coronavirus. And these loans are basically called Payroll Protection Program loans, PPP. So you might see this. And businesses are going to be qualified to take up to $10 million to basically cover their payroll. These loans are 100% guaranteed by the Small Business Administration. So there's going to be no personal guarantees, no collateral on your end if you apply for those. They must be taken between February 15th, which is already passed, and June 30th, 2020. So we still have a nice window to be able to take advantage of this. The good thing about the Payroll Protection Program loans is there's possibly a big portion of this loan can be forgiven if the proceeds are used to cover payroll costs, rent, mortgage, and utilities for up to 2 months from the loan origination date, okay? And then on top of that, the income forgiven from the forgiveness of debt will be excluded from income. So this is really nice. And it will have a maximum maturity rate of about 10 years and an interest rate of 4%. All right. Now, in addition to the loan provisions, the CARES Act also have some really generous tax provisions. Now, I'm not going to take too much time covering that because I think we need to focus on the loan and which loan to apply for and really what steps your practice should be taking to deal with this. So just we'll zoom through this really quickly. First, individuals are going to be given a rapidly advanced rebate, tax rebate of $1,200 per individual, $500 per child. Of course, there's going to be income limitations, so it may not apply to most dentists. The limitations start to phase out at $75,000 for single individuals, $150,000 for married filing jointly, and I believe $112,500 for head of households. A really nice provision for business owners and practice owners is that you'll be able to defer 50% of your employer's payroll tax deposits for 2020, with 50% of that deferred amount due by December 31st, 2021, and the other 50% due by December 31, 2022. Again, this is not Forgiveness of the payroll tax is just a deferral, okay? There's gonna be a refundable employer retention credit to equal to about 50% of qualified wages against quarterly employment taxes to offset against up to $10,000 of wages paid per employee while the office was closed. Now, this may not apply to all of you. They're also going to reinstate the net operating loss carrybacks, so that if this year, let's say you have an operating loss, a net operating loss, you'll actually be able to you will be able to carry back those losses and get tax refunds from taxes that you paid in the prior 2 years. So you, if you have a loss this year and you have paid net operating income taxes on net operating income from prior years, from 2018 and 19, you'll be able to claim some of that back. They also fixed some of the technical errors that were in the tax bill that passed at the end of 2017 regarding depreciation. So we were all expecting that, so I'm glad they corrected it. And then here's another nice one. If you take a distribution from your tax retirement funds up to $100,000, the income, well, first of all, it's going to be penalty free. And then the income from these distributions will be recognized over 3 years. So you won't, if you decide to take distributions out of your retirement plan, you won't be hit with the tax all in the year that you take the distribution. You'll actually be able to kind of average it or divide it over 3 years. There's going to be a waiver of required minimum distribution requirements for people that need to take required minimum distributions in 2020. They're going to also increase the limitations on contribution deductions for 2020. Here's another nice one for those that have defined benefit plans, retirement plans. Your contribution could be postponed all the way until January 1st of 2021. So that also might be a good cash flow saver. Certain employers that decide to pay their employees student loans up to $5,250 will basically be able to exclude that. The employees will be able to exclude that from their income. And I believe the employers will be able to deduct it. And like I said earlier, the forgiveness of debt from the forgiveness of the Payroll Protection Program loans will be excluded from income, which is, I think, great. All right, so I think here is the part that all of you were waiting for, which is, what's the difference between the different loan programs or the two different loan programs? So I kind of created this comparison here. Hopefully it's helpful. So on the left column, we have the Economic Injury Disaster Loan Assistance Program, which is called the EIDL Loan Program. And then we have the 7A Paycheck Protection Program on the right, which is basically the PPP loan. So how do you apply for either one? So for the EIDL loan, as many of you experienced, you had to go through the SBA website. It was clunky, and I don't know about you, it took me like 3 days just to create a username and password. The triple P loans are going to be available through SBA lenders. And we're still trying to figure out which lenders are going to be doing this, but we know that already existing SBA lenders will be able to do these Paycheck Protection Program loans. The maximum loan amount under the EIDL loan program is $2 million. The triple P loan program is going to be the lesser of $10 million or 2.5 times the average monthly payroll. Okay, so I think again the Paycheck Protection Program loans are really clear on how the lenders and the SBA are going to be calculating your loan amount. I haven't really seen a lot of clarity on the EIDL loans on how these are going to be calculated. I think it's going to be based on what they think your business would need in these economic injury disaster loans. The interest rate on the EIDL loans is 3.75%. On the Paycheck Protection loans, they're 4%. The loan terms on the EIDL loans, it could be up to 30 years. For the triple P loans, it's up to 10 years with payment deferred up to 1 year. So after your loan originates and you have the money on the Paycheck Protection Program loan, they may defer payments from 6 months to a year. The EIDL loans are going to be available in declared disaster areas. So your state would have to be declared by the president as a disaster area. The Paycheck Protection Program loans, or the 7A loans, are going to be basically any business that was affected by the coronavirus outbreak, and as long as you were in business as of February 15th, 2020. The EIDL loans have no loan forgiveness provisions. The 7A loans do have loan forgiveness provisions to cover qualified expenses, and we'll go over what these qualified expenses are. The EIDL loans may require collateral and guarantees. The 7A loans or the triple P loans require none. As far as the use of funds, we think the EIDL loans might be a little broader to use the funds versus the 7A loans, which specifically should only be used for payroll, rent, loan payments, and utilities. And then as far as the process, we think that the EIDL loans might be a little lengthy and more complicated. The 7A loans, because they're going through SBA lenders, which are usually, private companies and banks, the process might be faster, more streamlined, and there should be less red tape. So far, so good? All right.
Yes.
I'm just checking to see if we have any comments here. Okay, I think we're still good. All right. So more information on the 7A loans. They are also going to be available to independent contractors and sole proprietors. So if you are an independent contractor, dentist, or receiving your compensation not as an employee or W-2 wages, but as a 1099, you should be able to qualify for these 7A loans. Um, the loan amount is going to be calculated by multiplying the average monthly payroll costs times 2.5. Okay, so that's how they're going to determine what your loan amount is. So for example, if your average monthly payroll, uh, including uh, health insurance, retirement plan, contributions that you make on behalf of your employees, is is more. Let's say it's for example, if those numbers are $50,000 on average per month, then your loan amount is going to be 2.5 times that. Okay, which would roughly be about $125,000. Now, you're going to exclude from the qualified payroll expenses any salaries above $100,000 per employee. So if you have an employee that gets 125,000 annually, you're gonna subtract anything over 100,000, and you're just gonna take the average per month of 100,000, which would be like $8,000 and some change. And then of course, if you would also exclude any benefits you paid through the Families First Coronavirus Response Act, also known as the paid sick leave and paid family leave that passed last week. So if you made any payments there to your employees, those amounts would be excluding from calculating the amount of the loan. Now, the loan recipients, which would be the dental practices and business owners, will be eligible under the 7A loan for loan forgiveness for an amount equal to the total amount paid for the following expenses for over 8 weeks, okay? So if you pay these things over for 8 weeks, starting from the loan origination date, okay, these amounts are going to be forgiven from your loan balance. So now what are these expenses? It's going to be eligible payroll costs in addition to mortgage interest, rent, and utilities, provided that the mortgage, lease, and utility services were in place before February 15th, 2020. All right? So for many people, a big chunk, if you continue to pay your employees after your loan origination, pay your rent, and keep the lights on. If you do it for 8 weeks after your loan origination date, these amounts are going to be forgiven from your loan balance. And like I said earlier, these loan forgiveness amounts are not going to be taxable. So now, as you start applying with SBA lenders, what documents are you going to need? Now, I want to thank our friends at Fortune Management for being very proactive and starting to even talk with lenders. And they were able to, through their connections, to kind of get us a sneak peek of what lenders are going to be asking for. All right, so maybe make some notes here. You are going to need to obtain your employee earning reports for the last 12 months. Okay, going back to 12 months back, okay? And your report is gonna need to show gross wages paid to each employee. It should include you as the owner if you're getting compensated, and also any associates that you have in the practice, okay? It should also show paid time off, vacation paid to your employees. Include in the package any 1099s you paid in 2019 for people that may be, treated as employees, basically your associates, right? Include 1099s for that, because that also may need to be added, hopefully, as part of the loan amount. Include any health insurance premiums, because health insurance premiums is part of what your loan balance is going to be determined on. Okay, so health insurance premiums. Also, amounts you contribute to your 401k plans. We think also lenders, just to prove that you are in business, they need like your bylaws, articles of incorporation. They might need copies of your tax returns, although we haven't seen that. They might need copies of your driver's licenses for the owners. So just, be proactive, get these items ready. So as you find a good SBA lender, you could go through this process. Now, remember, for these paycheck protection loans, you're not going to apply for this through the SBA website, okay? In fact, if you get the SBA disaster loans, you're not going to qualify for the paycheck protection loans. So I know many of us have applied, but as long as you don't take out the money, I think you're going to be okay. All right. But just don't take, you can't double dip. You can't take the disaster loans and also take the paycheck protection loans. They're not going to let you do that. So I think you should probably, go through the matrix that we created and figure out which one might work better for you. But I think for most people, the payroll protection program loans are going to be better, or also known as the 7A loans, because of the loan forgiveness aspect. Oops. So here are some actions to consider in your practice, if you own a practice. I hope you've already done a lot of these things. But since your office is closed, I know 99% or more of dental offices are closed across the country, you should ask your employees to go on unemployment. Ask your lenders for a 90-day deferment on loan payments. Also, ask your landlord for deferment on lease payments. But I can tell you that most dental lenders have been granting that 90-day deferment on loan payments. I definitely think you should apply for the paycheck protection loans, or the 7A loans. Also, preserve your cash flows. Don't make any major purchases. Save that until you are you're actually back in operation and things are back to normal. If your cash flows allow, try to purchase dental supplies to avoid disruptions due to supply chain strains. We think there might be some shortages already, but again, I'm not saying hoard supplies, but just keep that in mind as you start getting low on certain things. Try to replenish your supplies. Of course, your tax payments are going to be due on July 15th instead of April 15th. And then finally, try to benefit from this time to connect with your family and loved ones. Use it for personal growth and, of course, spiritual growth. Regardless of what your faith is, I think spiritual growth and spirituality is something you definitely need to adhere to and stick to. All right. With that, I think we're going to take some time to maybe answer some questions and and you guys can let me know what questions you have in the comments section. All right, let's see. We have already some questions here, so let's see what we have. Um, someone is asking if someone's working on collections and maybe a couple of emergency patients a week, is that considered office closure? Very good question. I would strongly advise you to attend HR for Health's seminar on Monday at 9 Pacific. And hopefully Ali will be able to answer that question. I don't have the legal background or the HR background to be able to maybe answer that question accurately. But I would think that you know, your office is still closed. You're not really open, you know, for normal business. But I would pass that by your attorney or your HR company. As salaried employees, how many minutes or hours do I trigger a biweekly payroll for myself during emergency treatment? I think for salaried employees, I think that basically if you work just partially, you qualify for pay for that week. Again, that would be a great question for Ali or Ramshian and HR for Health. Someone is asking, when we do open back up, if we don't give an employee any hours or work due to lack of patients, can the employees still take FMLA? For example, if we open but don't schedule hygienists. There's still going to be more regulations coming from the DOL on that. You know, keep in mind, by now you should have advised your employees to be on unemployment. And the CARES Act also is very generous, and I didn't go into that, but they also beefed up the unemployment funds. So your employees are going to be taken care of through that way. And your employees, your employees are going to be making requests to you to trigger the paid sick leave and paid family leave, but that can only be triggered, I believe, after you open back up again. Someone was requesting that please everyone should mute their mics. So if you haven't done so, please mute your mic. You know, someone is asking about the $10,000 forgiven for idle loans. You know, again, this amount is going to be subtracted if you did get the $10,000 emergency idle loans. This amount is going to be forgiven, yes, but it's going to be subtracted from any loan forgiveness that you might trigger from the 7A loan. So I don't know. Part of me, you know, thinks that I would just stick with the 7A loan, because this $10,000 is not going to be above and beyond. Another question in regards to the 7A or the triple P and the calculation of average monthly payroll. If you only had the dental office with staff for the last 3 months, but prior to that, yes, they, you know, again, I just gave the general rules, but for newer businesses, there's going to be alternate ways of calculating the average monthly payroll. So I think most scenarios will be made whole. Can associate pay be included in payroll costs? Our sources believe so, and I think some of the language I saw in the bill also seems to indicate so. So we think that associate pay can be included in payroll costs. Yes, nonprofits are eligible for the 7A loans. But again, I didn't touch on that because most of our clients are not, I mean, all of our clients are really not nonprofits, so I didn't touch on that. Someone is asking if I applied for an EIDL loan, how will that affect the triple P loan? As long as you don't take out, the EIDL loan, it's not going to affect your 7A loan. Very good question from someone that has all their employees in a PEO organization or a professional employment organization. Will that fall into the 2.5 payroll? Again, I haven't seen anything specific with that, with regards to that, but I would seem to think it would. Probably I would look into checking with your PEO for more guidance on that, or again, maybe attend HR for Health's webinar on Monday at 9 a.m. Pacific. And hopefully they will open questions and answers. How does unemployment affect this since we are closed and no real payroll? So I think they're going to be looking at payroll to prior to when you were closed. And then as far as the loan forgiveness, it's going to be after your loan originates. So hopefully during the time that the office is closed, it's not going to affect either your loan amount or the loan forgiveness. As an independent contractor, what do we send for the SBA Form 2202? I think your best option might be the 7A loans, not the disaster relief loans through the SBA. So if you're an independent contractor, I think you're better off with the disaster relief loans. I'm sorry, no, I'll take that back. You're better off with the 7A loans. I wouldn't waste too much time with the disaster relief loans. Will there be methods to time origination date to correlate with the start date of clinical practice? I'm hoping it's going to be weeks, especially if you go through private lenders. The talk that I'm hearing from a lot of lenders is that some of them are probably going to be online by the end of next week. So this is going to be rather quick. So if I were to guess, I'm hoping that some of these loans would be originated by the end of April at the most, hopefully. Can a practice purchase loan be included in the calculation of the triple P loan? No. I think the amount of the triple P loan or the loan or the Paycheck Protection loan is only going to be based on an average of 2.5 months worth of payroll. Yes, I know someone was drawing all over the slide. I don't know how to turn that off. Someone was commenting about that. Since the dental practice is closed, are we essentially just paying our employees in lieu of what they would get for unemployment? I think, again, you should not be paying if your office is closed. At this point, they should be all on unemployment. If you are paying them and your office is closed, it doesn't look like you'll be eligible for the rebates from the government with regards to the paid sick leave and paid family leave. So again, if you watched Ali yesterday in his webinar, and again, I'm sure he's going to touch on that again Monday at 9 a.m. Pacific on HR for Health. I think you probably should have employees on unemployment. You don't have to like fire them or lay them off. You just, there's no work, so you're not going to be paying them since they haven't been working. Yes, you should have employees drawing unemployment. I'm just going through some of these questions. Some of them I think are asking the same question. For those that are asking about, what if I'm going, maybe a few hours a week to see emergencies, I think it's best that you try to get some clarification from your legal counsel. Someone is asking about, we routinely apply for tax extensions to October 15th. Will they be extending that further out? No, so tax returns are due now on July 15th. And then if you're not gonna be able to file by July 15th, you could file an extension to October 15th, but the taxes will be due on July 15th. Now, keep in mind, okay, and I think the Treasury made that very clear, and also the President made it very clear, that this may not also be the last stimulus bill. If things are not improving, we may see additional stimulus bills down the road. But hopefully, I'm being optimistic. I hope we don't need additional stimulus bills, and we're going to be all hopefully back to work soon. For those asking about loan origination date, what happens if we pay rent or other utilities before we get the loan? Is this still eligible? Again, if you're paying utilities and rent before you get the loan, chances are you're probably going to be continuing to pay your rent after you get the loan. So they're going to look at payments you make after you get the loan for 8 weeks, and that's what they're going to base the forgiveness on. For associates that are asking about loans or grants for 1099 contractors, under the Paycheck Protection Program, you will be eligible to apply for that. The $10,000 loans, do they need to be paid back? You're probably referring to the EIDL grants. They don't need to be paid back. They are grants, but they are going to be deducted from the loan forgiveness on the 7A loans. So if you are applying for the 7A loans, I wouldn't really bother too much with these $10,000 grants, because you're still going to have, you're still at the end will get only so much in loan forgiveness. At least that's what this bill says. If I have some employees working, like front office working, yeah, what happens? That's a very good question. I think when we say about office closures, but double check with your legal counsel, verify that. I think even if you have some, essential employees just doing some work, essentially still the office is closed and you've been affected by this coronavirus. So I think you would be okay, but double check with your counsel. Someone is asking if I am an S Corp and an employee of my own corporation, can money be used to pay myself in this case? I haven't seen anything in the bill that says otherwise. So at this point, yes, I'm assuming that you could do that because we haven't seen any exclusions. If anything, we see that the bill text actually went out of its way to indicate that independent contractors and 1099 employees or can qualify for this. So I think there's no exclusions from that. I'm looking at my bank Chase for 7A loans, but cannot find any information on it. Can you tell me where I can find online list of preferred lenders? Me and a lot of my friends and connections at different partners, we're all trying to find some preferred lenders that can do this quickly. At this point, we just probably are going to advise you to sit tight for a few days. I talked with like the traditional B of A's and Wells Fargo, Live Oak, and Lendeavor, and they were telling me that they're going to have some clarity later in the week. I'm also hearing rumors. I don't know how true this is, but I'm hearing it from some very reliable sources that fintech companies, these are like the PayPals and the Cabbage and all these business funding organizations, also will qualify to give or to give these loans on behalf of the SBA. So if these fintechs become SBA lenders, I would probably bet on them that they're going to do a better job than your traditional big banks, I think, because they have better technology behind them, and I think the loan process might be a lot smoother. Again, as we saw from the document list, this is not really an exhaustive list of things. They basically need proof of the payroll that you paid to employees, 1099 that you paid to your independent contractors who should be treated as employees, and they just want to make sure that your business was alive and in business as of February 15th. There's not going to be a whole lot of red tape. So once these lenders come online and they get the funds, we think that the process is going to be very smooth and very straightforward. And I'm optimistic that hopefully by the end of April, some of us will have these funds. So I still have about 36 questions, so we'll see how far we can go. So for the PPP loan, if you have laid the employees off, when should they be hired back? I would say if you want to get the loan forgiven, I think you would need to hire them back after your loan has originated. So I think that's when I would hire them back. If an employee has worked for less than 30 days, are they eligible for FMLA or paid sick leave? We don't think they're going to be eligible for the paid family leave. I would again advise you to visit the DOL's frequently asked questions or attend HR for Health's webinar on Monday. Okay, someone is telling me that you could do an EIDL and a 7A at the same time. I didn't want to say this because I don't want to confuse people. Okay, but since you're asking the question, I'll say these disaster loans or these EIDL loans can be given for other reasons besides the coronavirus. So yes, if you, let's say you qualified for an EIDL loan prior to February 15th, let's say you were subject to a flood or in an area that was declared by the president as a disaster area, as long as it was not for the same reason as the coronavirus, and you had an EIDL loan like that, yes, you could refi that loan. But again, I didn't want to say anything about it because I don't want to confuse people. But if you're applying for an EIDL loan for the same reason you're applying for the Paycheck Protection loan, you're not going to get both. Okay, so you're only going to get the one I really want you to get is the 7A or the triple P loan, because that loan will be forgiven. So that's the one I would recommend for you to apply for. If I pay medical stipend and not into a group insurance plan, do I get a credit for that? Again, the bill was not explicit about that, but heck, I would try. I would try to do everything I can to get the maximum amount. So as you are dealing with these lenders, I would list those amounts and cross your fingers. someone is again asking about the EIDL grant, the $10,000. Again, I don't think you're gonna be getting the $10,000 grant on top of the loan forgiveness. So that $10,000 grant through the EIDL loan is uh, um, is going to be subtracted from the amount that will be forgiven from the 7A loan. So um, if you want to apply for both, you could apply for both, but just uh, um, just know that the 10,000, you can't double dip. People are asking about the anticipated timing of the loan to be received. I think first we need to find the lenders that will do this. Then once we do that, I think it's going to be within weeks. So again, I'm crossing my fingers that we may start some of these funds being released by the end of the month. Someone is saying, make this simple for me. Because of the Paycheck Protection Loan, I can pay my employees for their regular work hours. I can apply for the loan and have it forgiven. The loan forgiveness part is after, for expenses that you paid after the loan has originated, not when you applied. So you would have to wait. I think my advice to you is don't pay your employees right now. Ask them to go on unemployment if your office is closed. Um, because any payments that you make right now while your office is closed and you haven't received the 7A loan are not going to be forgiven. That's based on what I read in the bill, and that's based on my understanding. Someone is asking if you open back up for work, clinical practice, but don't bring back hygiene immediately, those laid off employees won't have been reinstated. Therefore, they won't be eligible for FMLA, whatever other benefits, right? That's a really good question. I think, again, we're going to have more guidance from the Department of Labor. They're still working on issuing more guidance on that. But for the time being, since your office is closed, I don't think you're going to need to comply with paid sick leave or paid family leave as long as the office is closed. Someone is asking for payroll forgiveness, what payroll does this apply for? Only employees that are working once we are open? Yes. Well, it's actually not once you're open. The amount of loan forgiveness, again, is going to be done based on payroll paid after your loan is originated. So that's what the payroll forgiveness, that's what the forgiveness is going to be based on. It will be based on mortgage payments or loan payments, payroll paid after the loan is originated, utilities paid after the loan is originated, and rent paid after the loan is originated. Someone is asking, are these loans just for dental practices? No, they're available for all businesses. All businesses that were affected by this shutdown. And I think pretty much anyone in the country has probably been affected by this. So any small business that employs less than 500 employees qualifies for this. And people in the hospitality business actually get even more or less strict requirements. So we're not going to cover that because we really just focus on dentists. But yeah, these things are going to be available to any business. And yeah, so as long as they have less than 500 employees. Someone is asking for employees, and I think it's a very good question. For employees making over 100,000, are they completely excluded from this, or is it the amount over 100? I think it's the amount over 100,000. So, like I said in my example, if an employee makes 120,000, we're only going to include 100,000 of their wages in calculating the average. I think your lender is going to do this when you send them the payroll summary by employee. And then just make sure you review the loan amount with them to make sure they calculate it correctly. I won't answer questions that I've already answered, so just forgive me if I'm taking a little bit extra time to scroll here. Someone is asking if we defer rent or other loan payments, once paid, is this still going to be considered? Again, keep in mind, when we talk about forgiveness of the loan, they're only going to look at payments you make after you get the loan, after the loan is originated for 8 weeks. So don't worry if you're getting your loan payments or your rent deferred right now, but once you get your loan, make some payments, make your rent payments, make your loan payments, and these amounts will be forgiven from your 7A loan. Someone is asking if we get the 2.5 times payroll based on prior pay, the individuals the same amounts over the course of the 8 weeks, even if they are not working the same amount of hours, it's going to be based on the payroll that you actually pay during those 8 weeks. Now, we're going to probably have to figure out some cash flow analysis at that point to determine, is it worth it to pay people when they're not productive, or so we'll have to figure that out. We're sort of like taking it day by day at this point. So let's try to work on getting the money, and then I think we'll be working with you guys on figuring out what would be the best strategy to do that. So hopefully we still have a few weeks to figure that out. Questions about unemployment benefits. I'm not I'm not going to profess to be an expert at that, but again, I think this new bill that passed should put a lot of employees who are going to be on payroll on unemployment at ease, and I think the federal government will beef up requirements, will beef up resources for people that go on unemployment. We have probably a couple more minutes, so I'm going to go through and see. I'm going to go through and see what other things that I didn't cover here. Someone is asking if a 7A loan doesn't have to be taken until June 30th, then can we remain closed until we can see patients, have employees on unemployment until we open, and then bring teams back and get the 7A payout, meaning we don't have to rehire and bring back teams by April 2nd. No, I don't think these loans are gonna, even if you apply now, you're not gonna get these loans for a few weeks. So here's the thing, I mean, the government only allocated, like I think, and it's a lot of money, about $340 billion. But once those amounts are tapped out, they're not going to be able to give any more. So I don't know what the demand is going to be like, and they're going to be paying those loans based on a first come, first serve. So I would encourage you to get the money sooner rather than later. I wouldn't wait until June 30th. I would try to get it sooner rather than later. And you can't win at everything. We will try to maximize what we can get, but being in business for so long, I've learned you win some, you lose some, but you just want to make sure you win more than you lose. Great question on property taxes. So many of us that live in California and probably other states, we have property tax payments due on April 10th for our homes, our buildings. Those secured loans, we haven't heard from the counties that those loans are going to be, those property tax payments are going to be deferred. So they are still due on April 10th. I wish they could help, but especially for people that own real estate in Silicon Valley and expensive areas, I know those property tax payments that are coming up could be substantial. I wish I had better news for you there. For those that work with us, if you need any help with compiling the items that the lenders are going to need, make sure you reach out to my team and they'll help you in compiling that list. Again, give us a couple of days because we're also trying to figure out from the lenders who are going to be doing this, if what the list is going to include, so that when we prepare a package, we want to make sure it's complete. I think a lot of the questions have already been answered. Someone is asking if can LLC for real estate holding without employees benefit from these programs? Yeah, I mean, because the loan is being paid based on payroll. So if a company, I mean, if you own multiple companies, as long as they have employees or independent contractors, you should be able to apply for the loan. But if you don't have any employees, I'm not sure how you would qualify for that, but you might maybe qualify for other types of SBA loans. For questions about HR, I think it's best that you check with your HR company, or I know HR for Health has been helping a lot of clients, and they have been very resourceful the last, for as long as I've known them. Let's see what else we have here. Oh, I think we've been through most of the questions. There's only a couple of last questions here. With the Emergency Paid Sick Leave Act, does it sound like we can get refunded back the 80 hours of pay to employees? Can you use this and the PPP? Okay, great question. I know I haven't answered that. So none of these provisions are going to allow you to double or triple dip, okay? So first of all, just know this, with regards to getting refunded or getting tax credits on the paid sick leave and paid family leave, you're not going to get those paid sick leaves and paid family leave if your office is closed. So if your office is closed, you don't need to be paying, and you should not be paying paid sick leave and paid family leave as it pertains to the law that was passed last week. Once your office opens, your employees may request, okay, that they get covered under these. Now, when you make out these payments that you make out after you opened are going to qualify for the tax rebates. Now, these tax rebates or tax credits are going to be excluded from the loan forgiveness. So you're not going to be able to double dip, okay? We're trying to figure out who these preferred lenders are. And like I said, our partners and our friends at Fortune Management, my good friend Bernie Stoltz and his team has been working very hard to talk with various lenders, and we're waiting to hear some more information from them on that. And as soon as I have information from them or from other lenders, I will not be stingy with the information. I'll share it with everyone. Thank you, everybody, for joining us, and I appreciate you watching us today. I hope this has been informative. Please stay tuned. Check our Facebook page, and let me know if you need anything. Have a wonderful rest of the weekend. Try to get some rest and try not to worry too much. hopefully in a few weeks or maybe a month or two, all of this um, will be all behind us. Stay safe and stay healthy. Have a great day.